for you to go to your existing consumers, clients rather, and those individuals that you may be interested in visiting with. It's a prospecting tool. It's called Beneficiary Review. Without going into a tremendous amount of detail, it's a very non-threatening approach for you to point out that your clients, your friends, your business associates have some gaps possibly in their beneficiary designations for any number of various financial tools. This could range anywhere from their wills, their trusts, to certificate of deposits on accounts, cash accounts, retirement plans, credit cards that might have credit life to this. Most people forget what they put down on their particular form that they filled out maybe 4, 5, 10 years ago. So this is a stimulation for them to be able to go back, and we give a nice little tool, very easy for them to find that information, to go back and double check to make sure that really there hasn't been changes in their family. There could have been marital changes, there could have been children that have moved on out of the household, there could be other family members that might be responsible that shouldn't be anymore. So it's a great little process. We give you a producer guide, a booklet. You don't have to be an expert in estate planning. All you need to do is just kind of read through this. Know that there are so many different areas where the client should be reviewing their beneficiary designations. And then what you offer to them, and before I get to that, I should say here's a little postcard, or you can do this in an email format, or you can do it as a direct mail to generate some interest. I will tell you, without going into severe numbers, that we did have a individual use one of these postcards. It went out, it got to the desk of a very prominent business person in Southern California, and the sale that was generated was substantial. It wasn't that they didn't have advisors, but what happened was no one really brought this type of idea to this gentleman, and the gentleman then allowed the agent to go in and kind of review everything that they had. So a great prospecting tool. This is the short form that the client just goes through, and after they complete this, they'll share it with you. If it turns out there is some additional insurance sales outside of the A&H world or the critical illness world, the fine folks at AIM can help you in maybe developing a business plan, but I think you should take advantage of that. So anyway, that's prospecting. So let's talk about what are the things that you want to talk with critical illness insurance in the marketplace. We're a firm believer at American General that any type of living benefit, whether it be accident plans, critical illness, disability insurance, a very important part of the asset protection world. And so there is certainly a unique difference in today's world, though there is some crossover between a living benefits and a death benefit vehicle. The commissions on our product lines have not been affected since healthcare reform has come into play, where there have been some other areas where that has been just the opposite. It does complement their financial plans. I'm going to talk about that with you so you can understand exactly where you may want to position this. And it's easy and a quick sale in the general rule for most of the products, whether it be this one or what we're going to talk about next week on our accident plan. And then timely. With all that's happening now in health reform and all of the communications and the news, clients are becoming more obvious that they need to learn more about their health insurance and also what they have, what they don't have. One of the saddest things in the world is that most people only find out what their health insurance doesn't do until an event happens. And that's where these products help fill those gaps. So you want people to make sure they understand that these type of living benefits will help them maintain their current standard of living. Medical advances have really changed the life expectancy. I'm going to show something here in a few minutes on the probability of people surviving existing illnesses. Accidents happen on a regular basis, and people get hurt from those more than you would understand. If we have various type of marketing pieces that you could share with consumers. Stress on financial plans, stress on retirement plans. Once there's an unplanned, certainly illness or accident, and we want to make sure that you understand how to position this into that arena. And then with new changes with health insurance rules, there's various debt that people will incur when there is an illness or there is an accident, and we want to make sure that they don't have these bankruptcies that we've seen so many of over the years as a direct relationship to either illnesses or accidents. So you're aware that more than 60% of all the personal bankruptcies over the years have been due to medically related issues, and over 78% of those individuals that declared bankruptcy own some form of health insurance. That's a sad state of affairs. People have heart attacks and survive. People have strokes and survive. Back in the late 90s, the stroke survival rate was 45% when I first started talking about critical illness back then, and now it's up to 70%. So you can see what medical science is doing. Individuals, better testing and more aware. So cancer related expenses, people find out that they have cancer earlier, but it does require a tremendous amount of expense to be able to get over it. And then just in the accident world, this is a preview for next week's discussions. The injuries happen. 1 out of 9 Americans seek medical attention, and you'd be shocked as how many people go to the emergency room. So what they need to know is that these supplemental products or these accident plans will help them continue their retirement contributions in lieu of taking money out of that investment pool that changes their retirement horizon. That if they're in a business environment, whether they're a key person or they're a partner or a stockholder, that if something happens to one of those associates or one of those individuals, that a pool of money is going to help for business continuity. And it's a great sales talk, and it's a great tool to be able to use for it. College funding, people that have kids in college now or getting ready to, the worst case scenario is that they come down ill and the money that was going to be allocated to put those kids through their college education could be gone. And you want to make sure that they have a way to replace that. The biggest expense that most people have are their mortgage payments or their business payments. And we can cover that because they can use the money for anything that they so desire. You have other family members that may have to take time off when someone is diagnosed with an illness or has an accident that they have to recover from, and their income stream disappears. We'll have ways to be able to show you how to talk that. And then payments of other insurance premiums. If money is becoming so tight because it's being allocated to take care of medical expenditures, that important health insurance plan or that disability plan or that life insurance plan may go away because they can't afford premiums. So these are the areas where people want to make sure they understand where this money can fit. I think every one of you, if you've never discussed critical illness insurance, I would pick a friend, a neighbor, or someone that you know fairly well and just ask them, have they ever had someone in their family unit, someone in their business, or a friend diagnosed with an illness, with a heart attack, cancer, or stroke, and survived? And everyone's going to give you an answer that they probably do. And then the next question is, if they received a check between $10,000 or $500,000, what difference would have made in their life? And you're going to be shocked that people are going to ask you right out of the box, how come I haven't heard of this before? And you're going to tell them that because there's not many companies talking about it, and there aren't that many times that it's been brought up, and it's becoming very popular now because of all the changes in health reform and the direction that our country may be going, where people will need cash to get the head of that line for treatment. So who do you know has ever been diagnosed heart attack, cancer, or stroke and survived, and they received a large check? What would change in their life? You go out and test that, and you should be surprised at what opportunities you may see. Here's some data that you probably would like to know or have. You can get all this information now from the good folks over at AIM. But if you look at this chart, what this is an actuarial study from our company on our life insurance portfolio, our disability plans, and our critical illness policies. And what we did was we wanted to determine what was the probability of somebody being diagnosed with one of the illnesses prior to age 65 that our critical illness coverage takes care of, as compared to having a disability that would last for 6 months or greater, or somebody dying. And this is all prior to age 65. So for a 40-year-old, if you can read this chart, it's a 28% chance that a male 40 years old will be diagnosed with one of the illnesses in our policy prior to age 65. A 19% chance that they'll have a disability that will last for 6 months or greater, or a 5% chance that they'll die. Now, it's pretty obvious here. If you look at these numbers, you would think, oh, everybody should have critical illness insurance because it's a higher probability of occurrence, but it just doesn't happen at this stage. In other countries, it may be the case. We all know somebody who passed away from the end results of a heart condition, a cancer diagnosis or stroke. But what we don't really understand is that they could have been diagnosed 15 years ago, 20 years ago with that initial issue, and that's when you would have handed them a check. So keep that in mind, that there's a high probability of occurrence that they're an individual. It's about 3 to 4 to 1, depending on the age of the individuals. Just so that you know, the architect for the critical illness concept is a physician based out of, he's still in South Africa. He and his brother, Christian Bernard, did the first human heart-to-heart transplant, and they changed medical science. And the end result was people started living longer because of all the work that these individuals had done in their professions. And this Dr. Marius Bernard decided, I think my patients are losing their revenue, they're going broke because they can't pay for all these expenditures, and asked an insurance company to develop the critical illness concept, which is paying a lump sum benefit at diagnosis. So the client receives a check for one of the covered illnesses being diagnosed. So you get diagnosed, you receive a check. It's about as easy as I can tell you how this works. It doesn't make any difference if they are out of work or they lose income based on work. It's paid directly to them with no restrictions at all on their use, and it pays above any other coverage, so there's no coordination with any other insurance that they have, whether it be life, health insurance, you name it. And with few exceptions, most all occupations are accepted, which sometimes this is an alternative or an add-on to disability sales, which I'll discuss here in a second. So I want you to take a look at this list, and we're going to come back to this at the end here, and I'm not going to be on for much longer. Physicians are a key target market. People that have a single income family, one individual is out generating the income, the other one's doing the real hard work taking care of the family members. Succession planning, a very important part of the business planning process. The mortgages and debt that I mentioned earlier. You know, you don't want to deplete your investments. You could also dovetail our product into a long-term care overlay for exclusion periods. You've got disability overlays. If you just look through this list, there's any number of various places where critical illness insurance can be positioned not only as to solve a problem, but it's a great door opener for you to possibly even sell other forms of insurance, because no one's using this as a lead discussion, and you'd be ahead of the curve on everybody else. So foreclosures, most of them, again, are directly tied to people that have some type of health situation, not death. So this is a good reason for people to have mortgage protection using the critical illness concept. Cancer expenses above and beyond what is covered by health insurance, all those non-covered expenses can range up to $146,000 over a 5-year period of time. This is based on the American Cancer Society facts. If you don't know it, the average age of claims for critical illness insurance is 42 years old. So this is not an older age market. It is a current day-to-day. I mean, we have people that are in their 20s that are diagnosed with illnesses. As I said earlier, they'll be diagnosed, they'll survive, and they're going to live for a number of years. But if you handed them a check at the time of diagnosis, you would have changed their lives. So here's all of the survival rates. We've been through this number here before, so you just want to make sure that you understand it's not so much that people are going to be diagnosed, it's that they do survive. And that's the key to this. With survival comes an expense, and this is what you're going to help overcome. So where does the money come from? Well, if they don't have it, in their bank account, that is going to come out of their retirement plan or some other place that they probably should not be touching those funds for future needs. So you can make decisions based on your health, not your wealth, when you have to sit in front of a doctor and they start to explain, here is what we need to do for treatment with you. And instead of asking each time that question surfaces, does my health insurance cover it, you would be much better positioned to say, what specialist is in that field that I can go see? Because I have the money to pay above and beyond what my health insurance doesn't pay. So keep that in mind. So these are just all the different areas where we want to use it. We will touch base on this again. We're going to get into the product design here now just to give you an aerial view of how it fits, and you can certainly call the office in Yakima, and they can give you all the information that you need on the products and more detailed information. We've got various types of packages that will help you. But we cover 12 conditions, and one of them is a very unique process that we pay claims on. Minimum face amount in the majority of the states is $10,000, and the maximum face amount in almost all states is $500,000. So we pay for definitions of invasive cancer, heart attack, stroke, kidney failure, coma. We pay partial benefits for in situ cancer, which is non-invasive cancer. That would be where someone would find a lump. They would go, they would have it removed, that it had not spread anywhere, so that was considered in situ. These definitions are really what the oncologists tell us as a company, so they'll let us know the difference between invasive cancer or in situ. Heart attacks and strokes, needless to say, are from whatever the cardiologist or the neurologist tells us that the individual happened. But the unique feature that we have is the last one. It's loss of independent living. And this is a triggering point starting at age 18 and can go on for the rest of the natural life for that individual. So what we tried to do was, instead of having maybe more illnesses that you have to sit down with the client and discuss each one of those triggering points, you know, when would it pay a claim for multiple sclerosis? When would it pay a claim for Parkinson's? When would it pay a claim for Lou Gehrig's disease? We tried to make it so much easier for everyone to understand that if you lose 2 of the 6 daily activities deemed permanent by your physician for whatever reason, we will pay the full face value of the contract that you purchased from American General for the rest of your natural life if you take the lifetime benefit. And I'll explain that we have some other options. So just let that sink in for a second. You don't have to bring up all the various definitions of triggering points. It's just the loss of 2 of the 6 daily activities, and there'll always be a payment made for the rest of their natural life if they keep the policy in force. So our policy design is unlike what our first generation product was. When this is our 3rd generation plan that's out. We would have a reduction at age 65, and that was kind of historic from designs in Canada and Europe and other countries. And so we don't reduce the face value at age 65 with this current plan. What we do, though, at age 70, the policy will continue at the same face value that they purchased. Then the policy becomes a loss of independent living only triggering point. And we believe that that's really a very fair trade-off, because if they purchased a $200,000 benefit, if we were reducing the face value at age 65 down to $100,000, I don't know how many times I, in a sales situation, had a client's eyebrows just lift up saying, "You mean my coverage is going to cut in half if I haven't had a claim?" And the answer is yes, but you know, there's always an explanation to that. But with ours, they will always have that full face value, and if they ever lose 2 of the 6 daily activities for any reason whatsoever, we will pay the full face value for the lifetime benefit. So we issue policies from 18 to 64 for non-tobacco users, 18 to 59 for tobacco users. I'll talk about the term plan options that we have. There are 6 distinct rates. It's tobacco or non-tobacco. We do not rate cases. We do a pretty solid job of making an offer, you know, for people that have some health issues, and we're going to give them a standard plan. It's either going to be accepted or we're not going to accept it at all. We do have 5-year age bands. Sometimes that is a little bit of a competitive issue that I have to deal with when you have someone that's 41 years old and they're on the low side of that 5-year age band as compared to somebody at the higher edge. But overall, they balance out. And we have different premium bands, which are really just nothing more that you don't have to worry about that, because we do have a proposal system that takes care of all of these for you. We will issue up to $100,000 without any medical requirements. So in other words, no paramedical or no doctor visits, I should say. So all they have to do is just answer, you know, our Part 2 questions, which get into the details of have you ever had this, or that. We'll do a background check on their prescriptions, just to make sure that we don't have some information maybe slipping by. So there's non-medical underwriting, and we have no reduction in compensation for face values 100 and below, because I know that does happen in other areas of the country. For 100,000 and above, then we do ask for a paramedical. And the reason you see that little 15% there in red, I want to make sure you understand this. And when we first designed the product, we probably should have gone to the non-medical for $99,999, but because everyone runs a $100,000 quote. If you run a $101,000 quote, and the client can qualify health-wise by taking a paramedical, there'll be approximately a 15% discount in premium. So the more data that we can receive, certainly it's better for us to be able to price point that. So you can do some comparative analysis, and I'll show you a case design here just in a few seconds. Because some other options that are built into the policy now, these are not riders that have a cost, they're built in. There's a preventive care benefit of people taking various tests during the course of the year. They can send us a copy of the bill with a claim statement, and we'll send them a check for $50. We have a built-in return of premium in the policy in most of all the states. So what happens there, just to give you an idea, if someone has a $150,000 face value plan and they have a diagnosis of one of our illnesses, of course we'll pay them $150,000. If they die from one of our illnesses, they have a massive heart attack or stroke as an example and pass away, we'll send the family that $150,000. It would be a claim after the fact. If they die from some other reason than one of our covered illnesses, then we'll send them the premiums that were paid minus any partial benefits that may have been accumulated during the course of those years. But there's three ways to get money out of the policy. Get diagnosed with one of the current illnesses. If you die from one of the illnesses, you get the full face value. Or for the rest of their life, they'll get back the return of premium if they die from something other than the illnesses. In addition, we have a built-in doctor referral service. This is important. Best Doctors, it is a worldwide organization. It originated out of the Harvard Medical School. There's about 40,000 physicians in this network. Their primary job with us is to review clients' treatment from a diagnosed illness. And this is an actual case study that we had from a 39-year-old female that was diagnosed with breast cancer. And the original treatment was for her to have radiation and chemotherapy. After all of her files and records were reviewed by some specialists, they found that there were 3 types of cancer present that really said radiation and chemotherapy would have been totally ineffective. So that poor soul did not have to go through that pain, agony, and expense of going through those 2 forms of treatment, but reality is still had to have a had a single mastectomy, and that was really what was recommended. So in essence, what's happening, if you have our policy, you will have for your clients, when they're diagnosed with one of our illnesses, a second opinion on treatment that maybe their health insurance wouldn't cover. I think it's worth its weight in gold. We also have a benefit extension rider. This does have a premium attached to it, and it's got 2 components. It'll either be a continuance where you will be paid for multiple illnesses diagnosed. Example being someone has a heart attack, they have a $150,000 policy, we would pay them the $150,000. 6 months later, they have a cancer diagnosis, invasive cancer. We would pay them $150,000 at that particular time. And then 6 months later, this poor soul has a stroke. Well, then we would pay them another $150,000. So 6 months in between different illnesses, we would pay up to 3 times, not to exceed $500,000 of the face value of benefit. In addition, if an individual has a diagnosis, they have a heart attack, and then 2 years have passed being treatment-free, then we would, if they have another heart attack, we'll pay them 50% of the face value again. So you've got 3 different illnesses that can be paid, or they could also receive a payment for a reoccurrence of an illness. So that's our benefit extension rider. I'm getting close here to the end, so hang in there with me. Excuse me. We also have kind of a unique feature, and this is really done twofold. One, to give your clients an alternative choice. They understand the value proposition of the critical illness concept in their financial planning portfolio, or just their filling the gaps in their health insurance. I don't care what the direction is. But we decided that there are various times where a lifetime worth of benefits may not necessarily be that important to someone. So we've offered 10-year protection periods, 15, 20, and 30-year options in addition to the lifetime benefit that I have been talking about here earlier. So why would someone take a 15-year plan? 50-year-old that's a stockholder or is a key person in the business, and they want to add this to the buy-sell agreement or to the key person coverage. That person has 15 years worth of critical illness coverage. If something happens, a lump sum is paid. That money can be used to offset any number of potential business issues or help offset income streams or whatever they want to use the money for. And in that 15-year period, if the person were to die, that return of premium option is built in. So it's there. At the end of the 15 years, the coverage is over. If the person wants to continue coverage, they could either reapply at that time to be able to take either another 10-year plan or lifetime plan. So to give you a comparison, for you, if you're talking with someone and they like the idea of the critical illness concept, but maybe they just don't understand the premium, here's a male age 44, non-smoker, 101,000. There's that magic number. The lifetime benefit on an annual basis would be $1,090. If they took a 10-year plan, it would be $730. So now this just gives you the opportunity to describe to the client, here's your rationale for keeping a lifetime benefit, or this is the cost for 10 years worth of protection. What do you feel is the one you can afford? It's not so much do you want critical illness, which one do you want and which price point. So we've got some opening comments. Remember I mentioned the who do you know. If you haven't used that, I know it's been beaten to death and for those that have been in the business here for a while, but it's still important to bring it up almost every time you talk to people. I do it on the airplane almost every week that I travel, and I'm amazed at people's response to it. But, you know, the bottom line is, you know, if you had a heart attack, you know, as a result of the pressures of your work, would you really want to go back to that job? I made a sale many years ago that was directly related to this comment. I had a gentleman, I won't go into details here, but he was really having a tough time in his current business world, and he knew that he was stressed to the max, and he said, I'm buying that, because if, in fact, I do have a heart attack or I have a stroke and I'm going to survive like you're telling me the odds are pretty good, I'm going to go find another job and do something else that I really wanted to do, and this is going to be my ticket to do it. It's a tough ticket, but the reality is people buy this for all the obvious reasons. So as I said earlier, most people don't know what their health insurance doesn't cover. So this critical illness standalone, or the product that we're going to talk about next week, the accident plan that has critical illness riders attached to it, you'd want to be able to talk about those also. So let's go back to the markets here, and then we'll kind of tighten this up and open it up for questions. So physicians, why are they key market? Are we getting some feedback? Okay. They look at, they have disability insurance gaps, and so they would certainly be interested in that. We've got those individuals where you've got a single income family. You know, if you've got a gentleman that's traveling in his business, or he's every day working at his occupation, or a woman that's there, if they have someone that's home that's either part-time worker, less than 30 hours a week.
Correct.
We're getting some feedback, David. Are you getting that? I guess not.
Just remuted that one person who had that feedback. So.
Oh, okay, all right. So, so the non-earning spouses is a really strong market. People recognize that, you know, if that individual can't go to work, then there's going to be no income, but they need money to take care of things at the base. So these are all the various markets that will open up your opportunity. And what I'm going to do is just hit a recap here, because I think the feedback might be a challenge, and we'll go to questions. All right.
Bob, this is Dave. We were getting quite a bit of feedback, so I just went ahead and muted everybody again. I apologize for that, but it was being a little bit disruptive. We hope that you all have a better understanding of what critical illness insurance is, and more importantly what it does. But the key point here is you should do the oh, by the way, and at the end of any conversation you have with your clients or a prospective client, at the end of it, just said, oh, by the way, do you happen to know anybody who's ever had a cancer, heart attack, or stroke diagnosis? And do you think if they had a little more influx of cash, would that help relieve some of the stress? And what that does for you is put more money in your pocket. So it's a way to generate revenue with a couple of easy statements. Like I said, this type of insurance is very affordable. It's a great add-on to your existing clients, regardless of what type of insurance you may have sold in, whether it be an accident health policy or even a P&C type of a product. So keep this in mind as we go forward. Bob, I do appreciate you taking the time today. Again, we'll have Bob back again next Friday, same time, same station, for a brief webinar on their personal accident with a critical illness rider available to it as well. With that, we hope everybody has a great weekend. Thanks again for joining us. If you want a repeat of this, it is recorded. It will be up on our website later on this afternoon. And thank you, everybody, for joining us today. Thanks, Bob. I do appreciate it.